Half an hour away from the open in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Man with David Ingles.
Let's get to your top stories today. Stocks across the Asia-Pacific fall on concerns about tighter U.S. restrictions on chip sales to China, triggering a sell-off across these big tech names, the dollar tumbling to its weakest in almost 2 months. Now, China's closed-door policy meeting wraps up today with a document outlining Xi Jinping's longer-term vision for this economy. And in the U.S., President Biden tests positive for COVID as he struggles to stabilize his campaign. Trump's VP pick, J.D. Vance, is set to speak at the Republican convention.
It is this tech wipeout that has gone global, and we're certainly seeing it for another day. And take a look at what we're seeing in the Asia-Pacific at the get-go. And certainly the semiconductors are in focus after what we saw overnight there. $500 billion being wiped out in market value in some of these semiconductor stocks, based on these two Bloomberg stories that came out, right? So first it was the Trump comments on Taiwan. Second was that Biden administration reportedly considering the most severe trade restrictions on companies that continue to give China access to advanced semiconductor technology. So you take a look at how Taiwan is doing, just opening up, and there you go. The TAIEX is down some 2%. The Kospi is already down some 1%. We've seen the likes of SK Hynix is down 3.5% or more. And there's Taiwan Semi. There you go. We're down some 4% ahead of its earnings. Is the earnings picture going to change anything in terms of what we're seeing in terms of sentiment here today? Tokyo Electrons, that's the one to watch, because key to that Bloomberg scoop was that companies like Tokyo Electron, like ASML, might be at risk of getting these fines if, in fact, they continue to work with some Chinese businesses. So there you go. 9% drop for Tokyo Electron. That's the biggest drop we've seen in 9 years for that stock alone. And we're watching everything from the IT space, the semiconductor space, and even the Taiwan dollar and Korean won, which we're actually not seeing a huge reaction so far. Those are still pretty steady. In fact, you're still seeing some strength with the Korean won here this morning. Perhaps it's because of this dollar drop that we've seen overnight. And the yen certainly has been the key mover here. I mean, we basically strengthened some 1.5% or about a 3 yen move overnight. What's driving that? Is it a positioning play? That's certainly one thing to watch. If we can flip the boards and show you how the rest of the market is set up here right now. But that yen move is now, we're basically seeing dollar yen at the lowest in about 6 weeks or so. Of course, we have to find out whether they intervene or not. We have to wait another week or two for that. But then again, it's the dollar drop that is quite pronounced across G10. Take a look at, sterling, for example. We're back above 130. Euro dollars at 109 right now, ahead of that ECB meeting. Largely a non-event, it seems, at this point, just given all the headlines that we've seen. But we'll see if the ECB still tries to keep that rate cut on the table. That might still be something that we have to look for in the guidance as well. But overall, equity markets are in the red here this morning. Yields are ticking a little bit higher in the Treasury market, but we're watching very closely what we've been seeing across Treasuries overnight as well. But yes, the setup for China is looking like this. So it seems like all the headlines on geopolitics, U.S. election risk, really overshadowing what we're about to hear from the plenum, right? That readout comes out later on today as well. But right now, still some negative sentiment when it comes to futures here. 726, 27.7 for the currency.
Yeah, absolutely dirty session so far. Dirty morning across the Asia-Pacific, across these tech space as well. In fact, we're gaining steam right now going into the open today. In fact, here's a look at, as Yvonne is pointing out, of course, some of the big names. 4% drop on TSMC. You get that. You get this market falling out of bed in the early goings of the Thursday session. Belly's here with us, of course. She's been covering the story for us. And Bell, it doesn't seem the momentum is stopping at the moment in terms of the downside we're seeing.
No, if anything, it's really accelerating because I think, as Yvonne was saying there, you had the two stories yesterday, Trump's comments on Taiwan, that perhaps that protection into the future might not be guaranteed. Then you had the scoop that came out later around further restrictions. And it's really just that broader selling pressure that you're seeing. So this is not just a reaction to those stories. It's also what happened in the U.S. session overnight as well, because you saw big sell-offs for the likes of NVIDIA, for instance, other major chip makers. The stocks, for instance, really tumbling. And so I guess it's that broader question that's being raised now. You had these valuations that were already looking so stretched, and you'd had such a run-up that shares were really looking like they were priced to perfection. So just one little pinprick can be something that does spark a lot of concern, and it is that concern of how much these companies are relying on China. You talk about TSMC, for instance. I'm just taking a look at the analysis by geography, and this is a company that's relying on China for about 20% of its sales.
Can you touch on specifically Tokyo Electron, ASML? Those are the companies that might have be caught in these kind of cross currents here right now, and really what the impact could be on these companies.
Well, it is really heightened for them because you've got Tokyo Electron that's, it's slumping to multi-year lows today. We haven't seen this sort of slide in 6, 7 years, or 9 years, I think, even said Yvonne. But the point is that these companies are the ones that have really been caught in the crosshairs of the Bloomberg scoop relating to restrictions on Chinese tech companies. Because what's happening is that you've got companies like Tokyo Electron, like ASML, they're continuing to service the machines that Chinese tech companies already own. And that's really significant because if you don't service machinery, it can break down within a few months, definitely within a year. And so that is what's seen to be continuing to aid China's tech ambitions. And that's why the Biden administration is looking at further restrictions on these companies. Whether that goes ahead or not, very much a moot point.
All right. Belle, thank you. Annabelle Jewelers there. When it comes to what's been going on with this massive, pretty violent sort of reversal that we're seeing when it comes to big tech here this morning. We'll be hearing from UBS the next hour. Randy Abrams is going to be joining us to give their outlook on the sector overall and what he's thinking about these potential sort of trade protections and the like. He joins us, of course, from Taiwan as well.
Yeah, and what a day for TSMC to be reporting earnings. Get that in focus, too. Right, now, to the U.S. election race, too. So our other big story, obviously, going into, of course, what's been a fairly eventful week. So President Biden has tested positive for COVID as pressure continues to mount for him to step aside as the Democratic contender. Let's bring in Jody Schneider, our political news director, who's covering the Republican National Convention in Milwaukee. But yeah, Jody, let's start with the White House. And what do we know about President Biden's condition?
Yeah, we know that he has tested positive for COVID. He wasn't feeling particularly well. He had sort of a cold, what his physician is terming general malaise. And so he tested and did test positive. It appears to be a mild case. He's going to fly back to his beach home in Delaware to self-isolate for a few days or for as long as needed, he says. But of course, what's important about this is that it brings up all these issues of his vitality and his fitness for the job. The disastrous debate performance several weeks ago was blamed by his campaign and then the president himself on lack of sleep when he was traveling to Asia and to Europe, and then basically came back and said he had a cold. It was a cold. And so now when people hear of COVID, they start to wonder, is this the same kind of thing? And it also comes amid calls from more Democrats for him to drop out of the race. Today we heard from Adam Schiff, representative from California, who's running for the Senate, who is an important part of the Democratic Party, and he came out and said that he thinks it's time for the president to exit the race. And then he also went on to say in an interview with the LA Times that he's worried that if the president doesn't exit the race and isn't replaced at the top of the ticket soon, that the House and Senate races will be affected, that it would be very hard for the Democrats to retake the House leadership, the House majority, and maybe would lose the Senate as well. So there's a lot of pressure in the party right now, and also comes as the Republicans are unifying at their national convention here in Milwaukee. President Biden had hoped to do some counter-programming and particularly outreach to Hispanic and Black voters. He was supposed to speak to a major Latino advocacy group today and had to cancel that given this COVID diagnosis.
Yeah, certainly the contrast, as you highlighted, is quite stark. And we did see, the former President Trump walking out on the stage again with a bandage in his ear, and certainly showed that sort of defiance as well, Jody. I'm just wondering what's expected tonight out of night 3 at the RNC. I know we're expected to hear from the vice presidential pick.
Yeah, this is really, tonight is all about J.D. Vance, who who has been nominated as the vice president. He has quite a story. Famously wrote Hillbilly Elegy about growing up very poor in Appalachia, bringing himself up by his bootstraps. Went to Yale Law School, was in venture capital, and then became a U.S. senator. Many people don't know him. In Washington, we know him, but a lot of people don't. He is very much in the MAGA brand. He is really MAGA 2.0. He's very young. He's just 39 years old. He'll be 40 soon. But this is the next generation, keeping very much in the mold of Donald Trump, in that populist nationalist mode. And we will hear tonight, I'm sure, from him about that, about his story and about wanting to continue this brand that Donald Trump has advocated for since he took to the national stage as a politician in 2016.
All right. Lots to look forward to it in the next hour or so. Jody, thank you. Jody Schneider, our political news director, joining us out of Milwaukee here this evening. Coming up next, we're going to have analysis on what to expect out of this third plenum with SocGen as the country grapples with a slowing economy and the possible heightening of tensions with the U.S. Wei Yao joins us in just a few moments. And we're counting down the opens of trade in Shanghai, Shenzhen, and Hong Kong at a time of, not a really good time to really put risk on the table, just given the news flow that we've seen regarding this U.S. election, as well as the potential threat of tariffs on China and companies that deal with the mainland. Plenty more to come. Futures negative this morning. This is the China Show.
Right. Well, you look at the agenda for today, and we're getting to fix any time now as well. I just also want to remind you what's going on in these markets where what's that saying? When the chips fall, well, they are falling substantially. The Asia-Pacific Semiconductor Index is now off over 3% following this global pullback across chip stocks as well. More on this in a moment. Steepening CGB curve. Citi was out with a note this morning talking about how they're recommending 2 and a 5 and a steep earners there. In fact, the spread between the 7 and the 10 is now at the widest in about 4 years from now. And of course, the third plenum, of course, wrapping up today. Yep, certainly we're watching that, but it seems to be overshadowed by what we've been hearing over in the U.S., whether it's in Milwaukee or even news of President Biden, according to our sources, looking at more harsher trade restrictions on companies that do deal with China when it comes to advanced technology. Let's bring in Wei Yao, head of research and chief APAC economist at Societe Generale. She joins us here in our Hong Kong studios. Obviously, this tariff threat is really impacting markets now. I'm just wondering, does it change anything in terms of your forecasts on China's growth in particular?
It will eventually. If it's coming, for sure. I mean, it does make a material difference for the average tariff on Chinese goods to be lifted, to be basically doubled to 50% or even more, 60%. However, it really depends on the timeline, depends on how they bring in. It could be stages. Then over time, the impact could be absorbed, as we can see with the first batch, right? But in the near term, it could be very painful.
And the absorption mechanism would be through the currency? And how weak does currency need to get in a worst-case scenario, for example?
This aspect could be different from last time, because actually during the first round of, the first Trump tariff war, as the U.S. lifted tariff from 6% to 24%, the currency pretty much matched the tariff impact. Yeah. But if we apply the same number, we're essentially talking about dollar RMB as 8.5 or even close to 9. But we see very unlikely this time that China would allow this much depreciation. So, which only means that, this time it could be a bit more economic impact in the near term.
Could these tariffs be inflationary, and where are we likely to see it?
For the U.S., it could be, but tariff is a one-off measure, right? And also, when you think about it, if you raise the prices without other measures, it's actually not helping in terms of the demand. So it also depends on how they roll out the other policies.
Sure.
But for China, it's clear that, you look at the evolution of China's balance of payment, actually China has been more reliant on exports now, not less.
Yes.
Maybe not directly to the U.S., but indirectly maybe through the other countries. So, yeah, it will be more negative for China.
I mean, the June trade surplus was $100 billion.
Right.
Does that continue in your view up until maybe November? Does the strength in the exports continue?
Well, it looks like globally the trade momentum seems to be fine. You can also see in other Asian economies data. But for China, right, it's partly as a result of China's economic policy. It's a very imbalanced model right now. It's all about supply. The demand is, still weakening. And this really calls for, they have to do some cost correction to focus more on the demand. They have to.
Right.
What would it take? I mean, obviously, we've been seeing that the consumption side of things is still very weak.
Right.
What would it take to get consumers to spend now?
Okay, so first priority is indeed to stabilize the housing sector, which is not yet. All right, so I think it was encouraging to see they start to care about housing a bit more, try to stabilize it, but I guess it's fair to say that the effort is not enough and it's still slow. And then, indeed, when you look at the policy side, monetary policy is deflationary, fiscal policy is also deflationary. Monetary policy, the PBOC has sent a very clear signal. They don't like lower interest rates. They don't like much weaker currency. And the fiscal side, it seems the priority is more about deleveraging the LGFE debt rather than, supporting the economy. So they really need to reduce the amount of austerity in terms of the policy stance here, which means, essentially, I think the best option is for them to increase the CGB issuance, to borrow more by the central government. Okay,
and do we hear that? I suppose we don't hear that from the Third Plenum today. We probably get that out of the Politburo, if at all. How big do you think the fiscal push needs to be? I mean, what have we not heard effectively?
Okay, so one way to look at it is China's land sales have come off by more than 3 trillion RMB a year from the peak, right? So far, the CGB steps up by 1 trillion a year.
Okay.
So just to offset, they need to do another 2 trillion more every year.
Right. And that's just to get us back to neutral.
Yeah, just get back to neutral. So you can see the scale of the gap here, and the difficulty to support a domestic demand. But even if they add 1 more trillion this year, it will already be helpful. We just need something here. Yeah.
You mentioned about the plenum that we rarely get details, right? And you said course correction is certainly one thing that we need to look for, but not something that's dramatic like Big Bang stimulus. But what are the signals that we need to be really attuned to?
So first, I guess we need to be very realistic, how much cost correction it could happen, because it seems quite clear that what the leadership wants in terms of a long-term strategy, it's a focus on productivity, it's a focus on technology. So on that, a major shift away from supply to demand is already seems very unlikely given this direction. Then within the demand side, the signal, right? I mean, it doesn't seem that they're going to talk about, adding CGB, in this event. But at least, maybe they could say structurally increase the speed of CGB issuance, faster or something that could already maybe send a bit more positive signal. Tax reform is definitely needed. Looking at, the local governments, they're just running out of fiscal resources. However, again, the bigger problem is that the fiscal pie is getting smaller. So,
right.
Yeah.
And when you say fiscal reform, is that more to do with the sharing of, the fiscal transfer from local governments to the central government? Is the central government going to be taking less? How does that work? Because you only have effectively one main source of revenue, which is land sales, maybe, and then but the economy's not doing well. How do you think that looks? And what would be appeasing to the market when we get a signal in that direction?
Well, what will happen? What needs to happen is one thing. Whether it will be positive to the market in the short term is actually another thing. So what needs to happen is indeed, better sharing with local governments, more going to the local governments. Also, they need to increase the progressiveness of the tax system, which means a bit more income tax rather than value-added tax. But given the economy, domestic demand is already weak. that kind of adjustment, may not be positive in the short term. For example, they're talking about adding, expanding the scope for consumption tax. It doesn't sound like the best timing for that, but it's necessary medium term to long term.
And you're still sticking to your call that they're not going to do any cuts on headline rates.
I think it's getting clearer that our call is very much on track.
Yeah. Well, what's the headline rate now? What do you think the benchmark rate is?
The 7-day reverse.
Okay.
I think it's getting very, very clear. Yeah, it's getting clearer than before.
Right. Wei Yao, fantastic. Thank you so much. Great to speak with you. Wei Yao there, Head of Research and Chief Economist at APAC for SocGen. And of course, coming up as well here on the show, we'll be also joined by the Tsinghua University Director and former PBOC advisor, David Lee Daokui, to talk us through, of course, his insights as it pertains to the same issues that we just discussed there with Wei Yao. We'll leave you with a look at the sorry state of semiconductors and the sell-off we're seeing in that space. See if read out there. Plenty more ahead. The Open, 7 minutes away. This is The China Show. We're looking at declines going into the opening bell here, about 5 minutes away. It cuts both ways, right? Because you don't have a lot of big AI chip representation in these benchmarks. You don't get it upside, you don't get it to the downside, which is why perhaps we're likely to outperform the other markets in the region going into what's really a downdraft across the Asia-Pacific today.
Yep, relatively speaking, looking a little bit better here as well in terms of analyst actions. To tell you about Costco shipping, HSBC having a call on that. The H shares cut to reduce with a price target of $950 Hong Kong dollars. Hong Kong developers in focus as well with CGS, with Hysan Development. That's cut to a hold as well. And Stifel coming out with Prada, rated a new buy. Interestingly enough, given what we saw with the luxury stocks of late, whether it's Swatch, whether it's Hugo Boss, getting a hit here basically on their China outlook sales too. Yeah,
almost across the board on Swiss watch exports. Yeah, Hugo Boss gave that. I think L'Occitane also got hit recently as well. In any case, of course, stocks to watch going into the open today. So we talked about, watch gold mining shares on the back of where we are in gold. These are, of course, these are your chip plays listed in these markets that are coming online right now. Broadly speaking, of course, still feeling the downdraft too across the region here. Apart from this, other things to track, of course, in a couple of minutes before we forget, and we'll probably will, given all the news flow, the jobs numbers coming out of Australia are coming out actually in about 4 minutes from now. So just keep that in mind. Macro-wise, it's really a down arrow story on the dollar, for example. We are on track for the worst month for the dollar. Going back to the start of the year, 130 on cable, dollar yen is at 155. And we still have a rate decision, of course, coming out of the ECB today. Yep, ECB is certainly in focus here today, given that we are seeing a euro dollar at 109 levels here, and not likely to hear any sort of commitments when it comes to cuts, but maybe we'll hear some more guidance of at least keeping that door open for Christine Lagarde and co. There you go. Hang Seng pre-market, we're down about 0.5%. The Open is next. This is Bloomberg. Welcome back. You're watching The China Show. We're counting down the open of markets on a day that really you are seeing some of the most popular and crowded trades for most of this year, are basically seeing a massive wipeout and reversal here. We're talking, of course, when it comes to that tech trade. Interesting enough, we're seeing when it comes to China, not seeing as much of that downside here, just given the fact that Dave mentioned you're not getting those AI plays and that much exposure to that sort of space here. So you may be just able to see a little bit better performance with China and the rest of the world here today, Dave. The glass can be half full, right? Yes. The silver lining of not having your AI plays, but cuts both ways. We're looking at the opening bell, 10 seconds away. A couple of things, right? So the CSI 300 actually closed higher for a fifth straight session yesterday. We'll see if we get day 6. Now, all that being said, of course, if you measure those 5 days, it's not exactly a massive rally. It looks like, and I'll show you a chart later on, you are getting a lot more inflows and pickup into these large cap ETFs, which do suggest state funds are coming in to stabilize this market for now. Although in the opening bell, we're down 0.6%. 7 and 10-year yields. Right? So the difference between the two, you just do a simple spread between the two, what's 16 basis points right now. Widest now since 2020. Citi's out with a recommendation, not so much in 7 and 10, but on a steeper and a 2 to 5 is what they're recommending their clients at the moment. Have a look at the open in Hong Kong, where perhaps we might be feeling slightly more this sort of move out of long duration assets, particularly in tech, and some of your tech plays, as you can see, opening lower, 0.7% on the Hang Seng Tech Index. We have jobs numbers actually coming out today at about the close here in Hong Kong, the unemployment rate. We'll talk more about this story that you see bottom of your screens. Of course, the FT reporting that China is ordering some of its tech companies to relook at some of these models, which could actually delay the monetization of some of these AI models. Right. A couple of things we're tracking. Chips, of course, very much in focus. 3 to 4% drop on the chip sector index, which should be coming up bottom of your screen shortly. 0.2%. Hua Hong Semi's down about 2%. CITIC Resources came out earlier, possible acquisition or increase in stake here. And Zhuzhou CRRC actually came out with earnings, so up 4% as far as that is concerned. Okay. A couple of other stocks that we're tracking. So I had a look at some of the big declines overnight in the U.S. with U.S. listings, and these were the four that stood out to me. And as you can see, we're playing a bit of catch down here in the Asia Pacific at the open. As I promised, I'll leave you with this. These large cap ETFs that tend to get bought up by state funds when you have the need to stabilize the market are actually, as you can see, we've seen a period of massive inflows. In fact, yesterday, you combined the four, had the biggest inflows going back to the start of the year when, of course, that story was also quite prevalent. So we'll see. This is something to track, of course, as a market measure. Yvonne.
All right. We got to break some data here crossing your Bloomberg, and we're looking at these Aussie jobs report or job gains and the like here. And really, it's a blowout number. So we're talking about 50,176 jobs that were added. This is the month-on-month numbers for June. The estimate was for 20,000. So we're talking about more than double than what the consensus was. And that's why you're seeing that big reaction on the Aussie now. So basically, we've erased some of the losses here as these job increases are more than estimated as well. And yeah, we'll see if we get closer to that 70 cents handle for the Aussie right now.
Yeah, although this data set, right, Yvonne, is notoriously difficult to predict. Might as well do some dartboards and put a blindfold on and figure out. In any case, of course, it's a big beat. Let's keep it there. Okay, so we're wrapping up the third plenum today. President Xi Jinping will be unveiling his longer-term vision, of course, for the economy as we wrap up, of course, his twice-a-decade meeting on reform here. Let's bring in our other guest this hour, of course, is David Lee Daokui, Tsinghua University director and a former PBOC advisor. Professor, thank you so much for joining us this morning. I mean, what should we expect out of the third plenum? What is what are the conversations you're having with your circle there in Beijing?
Well, there are two areas of issues that we are expecting the third plenum will make progress in. The first area is short-term economic issues. That is, whether we will see the third plenum will come up with immediate and policies to help the economy to more quickly recover. The second area of issue to anticipate is long-term reform, of which the most important issue is local public finance, because there's a really need to prop up local public finance. Local governments have been busy for the past almost 20 years doing infrastructure, but they are excessively burdened by local debt. There should be some way to come to help. So these are the two issues to watch right now.
Yeah, I mean, can you maybe flesh that out a bit more? I mean, yet safe to say the fiscal plumbing in China has been pretty rocky, to say the least. What more can the central government do to support these indebted local governments?
Well, people are talking about increasing a certain amount of shares, tax shares for the local government. In other words, the local government will get more tax shares of tax revenue collected by the central government. But I do believe that there will be down the road, maybe this third plenum already, there would be some indication of that, for the central government to issue more central government sovereign debt and use the receipts from that central government sovereign debt. So swap out some of the local debt. Only that way can local governments be able to come back to a sustainable footing when it comes to public finance.
What about on the consumption side and ensuring that, we are still looking at still reforms needed, particularly around the social safety nets. Is there anything that you expect to come out of the third plenum as it pertains to being able to shore up consumer confidence, which this economy, frankly, lacks at the moment?
Well, I do strongly expect that there will be strong wording in this regard. That is for the document to claim, to call for more focus, more emphasis on China's consumption. That's also very important. Why? Because with that strong wording, down the road, maybe in the coming month, there will be programs to stimulate consumption by, for example, issuing consumption coupon for the National Day break, which is the October 1st to October 7th. The other area of fundamental reform to expect is that the tax revenue will be collected more from the consumption side rather than the production side. Now, for example, Chinese VAT, value-added tax, is now mainly collected from enterprises, so giving local governments where the enterprise is residing more incentives to increase production. Whereas for the receiving side, for the consumption side of the product, the local government gets nothing. So this is a kind of strange, kind of bizarre. This is the opposite of most countries' situation. So this creates an incentive for local government to support increased production of the enterprise in their local region, whereas neglecting the measures to promote local consumption. So this area, there should be some reforms.
How big of a priority would be to stabilize the property market now, Li Daokui? Because that seems to be the first and foremost thing when it comes to the consumer. Are we likely to hear more bolder measures from what we heard back in May?
Well, I think two measures we can expect. Number one is that we expect some certain statements saying that the developers should be stabilized in terms of their finance. In other words, there should be, in principle, no more defaults by the largest developers in the financial market, because the defaults of them in the financial markets are really doing a bad service to the financial sector. Its second area is for the document to announce that the old measures of managing the property market of the past 2 decades should be abolished, should be phased out. In other words, the restrictions in the purchasing of properties should be eliminated.
Okay, and what are your assumptions on when this housing market bottoms? A very simple question.
Okay, I believe that in the first-tier cities, Beijing, Shanghai, Guangzhou, Shenzhen, okay, by the beginning of next year, the market will bottom out in terms of price and in terms of transaction volume. However, for the third tier, second tier, third tier, and the fourth tier cities, it will take longer time, maybe 2 years, maybe 3 years. But to me, the most important thing for the Chinese economy is, number one, stabilize developers so that they do not default in the financial market. Number two, find a way to rejuvenate local government's economic enthusiasm. Now they are really slowing down. The local governments are really slowing down the overall economy because they're shrinking. They are trying to collect more tax revenue from private enterprises and then use revenue instead of spending. They put the money back to commercial banks and to other financiers. So overall, the local governments are shrinking. This is the number one issue of the Chinese economy.
I'm focused on other themes as well. I mean, obviously, we've heard the president talk up a little bit more of the private sector of late. Are we likely to see this plenum just kind of shift that balance away from the state, the SOEs, more to the private sector now?
That kind of talking has been going on for some time, but this time around in the third plenum, let's see. I hope we will see some new ways of expression, some new expressions, new statements about how private enterprises are important for the ruling party. Now, I have been proposing and I also anticipate some wording like this, that all enterprises, including the private enterprises, are economic foundations of the politics of the ruling party in order for the ruling party to to be able to govern the country effectively. So if something like that is stated in the Third Plenum statement, I think that would be a breakthrough.
And just to get your thoughts as well, because I know you've raised concerns, and this concerns the displacement of jobs because of technology. Maybe it's AI, maybe it's something else. You mentioned things like news, legal, I believe accounting. Do you think that will have a policy implication as it pertains to how the government looks to either regulate or develop, could be the same thing, the tech sector? What does that mean for jobs, and what does it mean for the tech sector? Yvonne was just talking about the private sector there as well.
Certainly. This time around, the AI, unlike the internet, has much quicker impact on the real economy than the internet. Last time around, 20 years ago, when there was a wave of internet, the first impact was more capital expenditure of enterprises, and therefore creating jobs for the tech industry, programmers and internet information engineers. This time around, nobody anticipated such a quick pace of the application of AI replacing actual jobs. The Chinese economy usually is pretty quick when it comes to measures to deal with emerging issues like this. So I do expect that there will be certain regulations, policies to at least slow down the replacement of jobs by AI, particularly in the area of auto driving, in the tech, unmanned taxis. So I do think there will be certain balancing move in this area. So this is, for good or for bad, China moves pretty fast, in this regard.
David, always great to have you. David Daokui, lead their former PBOC advisor and Tsinghua University director, ahead, of course, that readout coming through from the Third Plenum. It's interesting, too, because we've been focusing on just the headlines on news. We're still waiting for any signs of any details or signals from this Third Plenum, and it seems like it's all been overshadowed by the geopolitics here right now. That's sort of the case from the call, I guess, from our Bloomberg Opinion columnist, Julie Ren, pointing out that there's barely any public interest when it comes to the Third Plenum. Instead, Chinese people are more interested in the U.S. presidential election, and especially Donald Trump's VP pick, J.D. Vance. Julie joins us now. Why do you think people are more interested in this U.S. election than maybe what could come out domestically?
Well, it is a lot of drama, right? People get to follow it in real time, all the twists and turns. Everybody likes House of Cards, right? But more importantly, the U.S. election and the political process is wide open. Everybody gets to say something in the public discourse. And we hear a lot about the conversations on the pressing socioeconomic issues in the U.S. Whereas in China, the Third Plenum, we all know it's a secret meeting. We don't know what they're talking about. It's private. A few days ago, Xinhua had a news agency had a short statement out saying, the meeting has started. And later, sometime in the evening, we'll see another statement that can read very, very cryptic, right? And then we don't really know the tone of the top policymakers until a few weeks from now. And business people will try to go to Beijing and say, what do you really mean exactly? Yeah. And also, China's economic downturn has been going on for quite a few years, right? Last year, people were still talking about the property market. What are your possible solutions? How can we pull the property market out of the bottom? And now no one talks about it. People just say, it's a long COVID. It's a cycle. You just have to wait for the cycle to bottom out. There's just so much disengagement. Even academics and policy advisors, they don't have very much to say if you look around the Chinese media.
Yeah, I guess in some ways underscores the animal spirits have taken a backseat, certainly for now. You mentioned J.D. Vance, of course, and I think the headline of one of her stories is quoting him directly. "I don't like China," is what he said.
Yes.
How is this being viewed on the mainland?
Well, surprisingly enough, China, of course, has those far left crazy people who trash U.S. whenever they can, right? But surprisingly enough, I think a lot of people are just
amazed that someone with such a broken childhood, such humble background, can come out to the political top, be very successful before even turning 40, right? I mean, China, let's be honest, has our own hillbillies. They are the migrant workers. They were born in poor villages. They came out in their teenage years to the big cities to do midnight jobs. And a lot of them are very troubled. I mean, China has 300 million migrant workers. President Xi Jinping's high-end manufacturing push is actually leaving these people behind. Like, they are not very well educated. They cannot build robotics or semiconductor chips, right? And then a lot of them are getting old. According to the government's own statistics, 30% are over the age of 50, which makes sense because they've been coming out since the 1990s, right? And they have no social security, no social safety net. They don't have hukou. They have no savings because all the money was sent back to the villages. And what are they going to do when it's time for them to retire, right? And then, like, a lot of them used to be construction workers, and there's no construction in China now. Even the so-called Uber taxi drivers, there are tons of them because everyone is becoming a driver now, and the money is hard to come by. I just think that these people are having a very hard time, and no politicians in China is standing up for them.
And at some point, you might get these driverless cars and these robo-taxis, and that's another displacement we need to talk about.
Right. Like, before we talk about how AI can take away white-collar jobs, we should talk about how high-end manufacturing and the new productive forces are taking away the blue-collar jobs. And China has a lot of unskilled workers.
Yeah.
Julie, thank you. Julie Ren, our Bloomberg Opinion columnist, on her take on many of the other topics there. We'll leave you with a look at, of course, the Republican National Congress right now, where we understand that the vice presidential pick, J.D. Vance, is set to speak. Plenty more ahead. This is Bloomberg. Back, you're watching the China Show. About going into the 20-minute mark into the cash market session, and trust me when I say we're doing better across these markets compared to what else we're seeing across the region. We're still down to 0.5%. Hang Seng, as you can see, is in the green right now.
Yeah, that's interesting too. But the tech space still seems to be a little bit of pressure, comparatively speaking, to the broader markets. So we're focusing very much still on what this means, right? This sucking of market value that we've seen when it comes to this tech trade. Is it technical? Is it just an excuse to really unwind some of these trades here? You mentioned about the valuations on some of these. I think we're still above, or there was still a premium to.
Yeah, even after the 6% drop. In fact, we already dropped, I think, already one day yesterday. I mean, some of these, NVIDIA, for example, I'm racking my brain, I think is trading at 37 times earnings. The S&P's at 21. And we know there's a premium anyway, but it's still trading at a premium. If you go down the ladder, I think Intel's trading about 21, 22. Qualcomm's trading about, again, I'm racking my brain, 27, 28, but still at a premium. So still ways to go, and which reminds us, of course, that there is a big one coming out with earnings today. Yeah,
TSMC. Yeah. So are the earnings going to be enough to maybe change the overall direction of this? I mean, is this just sort of something that maybe we could just see as a pause versus something that's more substantial moving on from here? That's the key question the market is asking here right now. But if you want to see what the key concern is among these global tech plays, obviously there was always about valuation. That was one concern. Positioning was certainly one concern.
Market concentration.
The geopolitical risk, though, I think that was sort of the answer that we got of what pulls the trigger for a lot of investors here on whether to actually take the chips off the table when it comes to these semiconductor stocks as well. So we're definitely going to preview those TSMC earnings coming up in the next hour. UBS is going to be joining us. Plenty more ahead. This is Bloomberg.
Okay. This story keeps giving. So it's Thursday now, right?
Yeah.
So to get our viewers up to speed on what's happened here, well, but the headline, by the way, is the Hong Kong Consumer Council is now apologizing to the company because of a report they put out on Monday that, I guess, caused some eyebrows from the company.
That their water products contain bromate.
Yeah. I didn't even know what that was. I had to look it up.
We had to look it up.
Yeah.
But basically, it's not good. Yesterday, they clarified. Today, they're apologizing. That's how you're seeing a second day of gains for Nongfu Spring there. What they're saying right now is that they used the wrong standard. So they're reclassifying these samples as a separate category of drinking natural water, and therefore re-rating the performance to the highest of 5 stars.
Okay.
Yeah.
So it's 5 out of 5 from 4.5.
From 4.5. So,
oh
yeah.
my goodness. Okay.
But there was out of no food, which is 1. There were 30 different types of water that they actually mentioned in this report
Did
as well.
Did they apologize?
I don't think they apologized to everyone.
29?
I don't think they apologized to everyone. I could be wrong with that, but
yeah.
yes, yeah.
Well, yeah, certainly. You can read about that on the Bloomberg terminal. It is, by the way, Nongfu Spring as a mover in this market. You're looking at the Hang Seng Index, is the biggest mover on the Hang Seng Index on the back of that group. We should have completely reversed all the losses that we had following that initial report that, there were traces of something not good in the water. Okay, let's have a look at how we're trading. So this is the, China benchmark, of course, the steepener trade. We're looking at the rest of the region, of course, and really where you are getting the big tech representations, right? So you have the Tokyo Electron on the Nikkei, you have Samsung, SK Hynix, and the Kospi, you have TSMC in Taiwan. Not sure why Australia's in there, but yeah, Australia's in there too. The jobs data came out, of course, this hour.
Yeah, so it was stronger than expected. So you're seeing a little bit of a pop there in the Aussie, but we're actually not seeing that big a reaction in the stock market. In fact, it seems like Australia's pretty sheltered from, of course, this sort of tech sell-off. But basically, we're focusing on the North Asia here today, Japan, Kospi, as well as Taiwan. We're just a few minutes away, I believe. We'll see the next hour when former President Donald Trump's running mate, J.D. Vance, expected to speak at the RNC in Milwaukee. This is Bloomberg. Welcome back to the China Show. Here's a look at the HSI half hour into the session. It's flat, but hey, we'll take it here today, just given what we're seeing in this backdrop here in the Asia Pacific, where basically this large cap tech sell-off continues on for another day and really has gone global now. You take a look at what we're seeing when it comes to the likes of Tokyo Electron. We're down the most in 9 years. Take a look at TSMC ahead of its earnings. We certainly are asking a lot of questions of how long this Magnificent Seven effect is going to last as well, too.
Yeah. Jensen Huang is $7 billion poorer this week. Don't trust me on that. You can look that up on Rich Go for our Bloomberg clients. So he took a very big hit overnight because the stock dropped. NVIDIA, of course, 6%.
I think it's 200 billion market cap.
200 billion market cap. It wasn't NVIDIA. $500 billion. You take the entire SOX index. And, that's playing out across some of these chip stocks, which we'll show you in a moment. But before we get to that, we'll just go through some of the other themes, too. Macro-wise, so the dollar downdraft, right? We are on track for the worst month for the dollar index this year. Granted that we still have about a week and a half left in trading, but, cable's back at 130 for the first time since I believe, mid or early 2023. Dollar yen is now trading at about a 7-week low. So big move down on Friday. Did they intervene yesterday? We were trying to figure that out, too, because you had a 1% gain in the yen yesterday, which, by the way, also happened at about the same time as the chip story came out. So that could also be partly positioning and the risk aversion back into the warm embrace of the Japanese haven, the Japanese yen. Gold's still, gold's still doing well. Bitcoin's still doing well. But the chips, very quick. Oh, by the way, ECB decision later today. Likely not to do anything, but will Madame Lagarde signal a second cut is coming in September, which I just thought about it. The Fed and the ECB could cut in the same month for the first time, I believe, in several years. Anyway, here's the sorry state of semiconductors, with the exception of some of the Chinese plays, of course, mainland Chinese plays, like SMIC.
Yeah, they're actually doing a little bit better there and actually seeing SMIC in the green here this morning, but take a look at some of these big names like SK Hynix down 4%, Taiwan 73%. That's enough to drag the TAIEX down close to 2% losses there in Taipei here this morning. Let's bring in MLI strategist Mark Cranfield joining us out of Singapore to talk us more about this tech trade that seems to be unwinding in a pretty ugly way right now. Are we likely to see something of a pause in the next few days or so, or do you think this is something of a reversal that is going to be substantially lower and sustainable?
Well, the timing is very awkward from an investor's point of view. We're just into the early stages of the earnings season in the US, and as you mentioned, TSMC is coming up later today. We had the big Dutch stock yesterday as well, and there's more to come. NVIDIA doesn't report for a few weeks yet, and he's the big daddy, of course, of this whole story. So to have this come out of left field, and for most people that's what it was, this report that the United States may impose sanctions on some of these foreign companies, as you mentioned, Tokyo Electron having an especially bad day today. But the fact that they've gone way beyond China specifically is something new that investors hadn't had to deal with. It's into the heart of the earnings season. We've had a tremendous run in most of these big tech companies, particularly the Magnificent Seven, as you mentioned earlier. And you can see why people are suddenly getting very nervous. And the retail crowd as well seems to have shifted their attention to small cap stocks. So they've also taken away some of their money from some of these big names like NVIDIA and Microsoft and these kind of people. So you're getting some rotation going on. You've got nerves ahead of earnings season when the bar is very, very high for people to achieve what the market has already priced in. And then you get hit with something that comes completely out of the blue like this. So no wonder people are really on the back foot. It could take a couple of weeks to sort this out, because until you see the reassurance that these big companies are really making the kind of profits that was promised or is priced into the market, people will definitely want to take a defensive approach to that. Plus, on top of all of this, you have uncertainty over the US election. There's geopolitics in the background as well. You've got China's plenum going on. There are lots of excuses for investors to say, OK, we've had a good run. Let's move to the sidelines for a while.
Which is, when you mentioned awkward, Mark, in a few hours, we get earnings from TSMC, and I'm wondering whether we get a good enough number there that actually turns the tide. You know, people have been waiting to buy a dip. This is it, or maybe momentum, maybe not on your side. Could TSMC be that circuit breaker?
Well, the hopes are very high. Their sales numbers for June were very good. Everyone saw that. They were once again on a year-on-year basis. They were up on a more than 30%. All looked very healthy from that point of view. It's probably the outlook that will be most interesting to people here. So the numbers in themselves, they can probably meet the expectations. They often do. But it's what they think about the market going forward. And they will obviously be influenced now by what they're hearing from the United States as well. So if TSMC is concerned and they relay that during their conference call with investors, that won't be helpful at all. Really, it's going to be very dependent on what message the company gives to the world on how they see the next few months playing out. That's often what is the biggest focus for investors. So hopefully they will see this as just being a blip, something they can easily override. But if not, then we're going to be looking at another leg down for tech stocks around the world.
Mark, there's been an interesting drop in the dollar as well. I'm just wondering, we're scratching our heads on what's really behind it, but we're still seeing the greenback set for one of the worst months of this year. And this yen move of 3 yen, I mean, what do you think was behind it, really?
There's a couple of things there. And as one of the key factors for the foreign exchange market is that short-term yields in the United States are finally showing some decent downside traction. So particularly if you look at the one-year yield in the United States, it has fallen quite significantly this month. A lot of people focus, or a lot of market news you'll hear is focused on the 10-year Treasury yield. But in terms of foreign exchange market, the 1- and the 2-year yields are much more important for what happens on a day-to-day basis. Clearly, there's some downward traction in there as people start to expect the first Federal Reserve cut comes in September. That's now fully priced. People will pretty soon be speculating on July as well, because they can see that everything is moving in the right direction. If we get a PCE print later this month, which supports the Fed view that they're getting very close to their target, you may well get the pricing for July to be a 50-50 bet. All of that is weighing on the US dollar. On the other side of that, of course, the short positioning in the yen was huge. Going into this recent move in US yields, the shorts are as big as they've ever been. And they're obviously getting very nervous and cutting back as well. And we've got a Bank of Japan meeting coming up where people fully expect to see some form of tightening there as well. So you put all those factors together and speculation that Donald Trump thinks the yen is too weak as well. Throw it all together, and it's a good recipe for a bit of yen strength.
Yeah, Mark Cranfield, there are MLive strategists in Singapore. It's also worth noting that Donald Trump said that he wants lower rates, just don't cut them. Wow, well, Biden's in office. But it's a low-rate environment there. Okay, let's talk about TSMC. These earnings coming out, maybe some theories. What is behind this tech tantrum that we're seeing right now? Randy Abrams is with us, head of Taiwan research at UBS. Randy, good morning from Hong Kong, and thanks for joining us. Need to pick your brain, sir. What theories do you have on what is behind this violent pullback in chip stocks?
Yeah, good morning. I think there's two factors. There's business fundamentals, and it's a bit of return where geopolitics matters again, like it did a few years ago. And I think it's very much that's impacting tech stocks. We had a few things come up. I think Bloomberg did report about U.S. potential restrictions on or tightening some of the restrictions on tools that can go to China. That's very much in line with what UBS was expecting. Our analyst, Tim Arcuri's talks to Commerce Department, they were expecting tightening of the rules. It's not a change of the goalposts. Mature tools still go ahead, but it could further tighten up what they've announced on advanced memory and logic. So that's, I think, the first factor impacting the stocks. Second, when we come back to, do we get to tariffs? And if we went back to 2018, when the market started to get worried about tariffs, we did have a bit of a mid-cycle correction at that time, where companies, the first thing they do, they worry about demand, and they cut inventory. The ultimate action, it really didn't affect demand that much. But I think that's on people's minds now about the tariffs. And then you did have the comments about Taiwan paying for military. So I think you did have all those factors, not necessarily tied to, I think, what you'll see for business fundamentals. But if we look at those factors, probably do weigh on the tech sector today.
And just given those headlines and obviously what you're seeing in the fundamentals, do you think investors are likely to buy the dip? Would you recommend buying on this dip?
Yeah, so our take, we still do view it's too early to sell out of tech. And I think the main factors for that, so coming back to the business, and there's kind of two main parts. We have the cloud AI, and we also have, you can almost say everything else at this stage, PC, smartphone, servers. But our view is cloud AI is still strong. And I think as we go into results season, we'll get that outlook from the advanced foundries. And we'll also get it from hyperscalers that, at least for now, as we go into the next several quarters, and the feedback they're giving to the supply chain is that the arms race to build out AI continues, and will at least continue as we go into these new AI GPUs. It'll ramp up end of this year into next year. So that's on track. And then I'd say on the other applications, after coming off a couple years of declines coming out of COVID on things like smartphone PCs, or even general server was down last year, those areas are picking up. So our take, I think investors still should be looking at pullbacks, and that's probably where we do come in. Now, flip side, I'll just say if we carry forward, say, 12 months from now, and it really looks like the base case severe tariffs, at that point, and if we're at a plateau on cloud, maybe further out, we could start to worry a bit. But at this stage, I think there's prospect on any real pullback. Funds could come back given still looks like a good outlook into the coming few quarters for tech.
Randy, TSMC earnings are on the table. I think the street expects on net income about a 30% pop. What are your expectations?
Yeah, so I'll just say for into these results, we've flagged just, I'll say on an overall, a couple views. The outlook for demand is still tracking, if anything, a little better than how it looked back in April. Both cloud, I think there's still going to be aggressive investment, both on the advanced capacity, where nodes like 5 nanometer and 3 nanometer are very full. That's what makes a lot of the AI chips and high-end, high-performance computing chips. That's very tight, so I think the investment will be there. ASML did say it overnight, starting to get orders on the next technology node. So that is one part that we'll get. And I think the other is that we've already had the leading GPU company say, hey, they'll expect somewhat higher pricing. Selling value is something advanced foundries are doing. So the other outlook we could see is pricing to reflect inflationary costs, which do help cover some of the costs, and also some of these costs to geographically diversify. which should be a good outlook for margin on a midterm basis, really on track for the long-term target.
Yeah, you mentioned, TSMC just still being that leader when it comes to the design of these AI chips. I'm just wondering, Randy, do you see any, names or other rivals that could actually narrow that gap anytime soon? Or is TSMC still going to be that dominant play?
Yeah, in advanced manufacturing, you have three. You've got the main company in the U.S., you've got Korea, and you've got Taiwan. At this stage, I would say for making most of the AI chips, accelerators or GPU, it's still, we kind of have it for advanced foundry in Taiwan. That still has that. Now, I'll say for bringing up customers, it's just a long process. It takes a lot of time. You start with small designs, and then you get awarded bigger designs. So that's why I'd say over the next few years, you still need to see the signposts of executing on the smaller things for a major change in that leadership.
All right, Randy, we'll leave it there, but thank you. Randy Abrams there, head of Taiwan research at UBS, joining us live from Taipei this morning. And we're set to hear from Donald Trump's vice presidential pick, J.D. Vance, pretty soon. We'll be live from Milwaukee and the Republican National Convention next. This is Bloomberg.
Welcome back. You're watching The China Show. We'll take you straight back to the U.S. election story, of course, and we're waiting for Ohio Senator and Vice Presidential nominee, of course, J.D. Vance. He is set to speak, we understand, in a couple of minutes. Let's get the latest right now with our Bloomberg Balance of Power co-anchor, Kayleigh Lyons. She is, in fact, there in Milwaukee, and you might hear some background noise. Of course, she is actually there where things are taking place. Kayleigh, thanks for joining us. Just what exactly is happening right now?
Well, the atmosphere is definitely electric, as I'm sure you can hear. The crowd is very energetic as the former president's son, Donald Trump Jr., is now speaking on this stage behind me. Don Jr., of course, someone who advocated strongly for the selection of Senator J.D. Vance as the vice presidential nominee for Donald Trump. He's really setting the stage here for when we hear from Vance himself. After Don Jr. speaks, J.D. Vance's wife, Usha Vance, will be introducing him. And then, of course, the vice presidential nominee will be speaking himself. This is really going to be the biggest stage he has ever stood on, at least in political terms, considering that he does not have an incredibly long political history. He just, of course, entered the U.S. Senate in January of 2023. So for many Americans, this is going to be their first real introduction to Senator Vance. Of course, this is happening on the third night of the convention, in which the focus is on foreign policy. The theme is Make America Strong once again. So it wouldn't be surprising to hear Senator Vance talking a bit about foreign policy, specifically his views on Ukraine, for example, or, of course, on China, in which he is very much in line with Donald Trump in terms of favoring more protectionist policy, including tariffs on goods coming, of course, not just from China, but elsewhere as well. So it'll be an insight into the political thinking and policy thinking of Senator Vance tonight.
Yeah, can you talk a bit more about what he said in the past about China? Because he suggested the U.S. military focus on China as well, not just when it comes to tariffs and this whole protectionist sort of mantra that we've heard from him, but what exactly could we hear in terms of his stance on China in this speech?
Well, in the first interview that Senator Vance gave after becoming the vice presidential nominee on Fox News earlier this week, he described China as the biggest threat the U.S. is facing. He essentially said that needs to supersede all else, including providing funding for Ukraine, other theaters like the European theater, and instead the energy should really be directed toward the Pacific, toward China specifically. He also, I would remind you, has a family history with drug abuse. His mother was a drug addict. He has been very passionate about fentanyl specifically. That is an issue that in the U.S. translates into a number of policy arenas, China specifically, and then, of course, the border over which that fentanyl can come from. So it'll be interesting to hear what kind of tone that J.D. Vance will strike tonight when it comes from China, as it is incredibly popular in the United States to be hawkish on China. This is not just something that happens within the Republican Party, I would remind you, but President Biden has been pretty tough on China as well, including the Bloomberg reporting just from today in regard to restrictions on chip equipment. So this is going to be a consistent theme, but as they talk about making America strong again, in the eyes of someone like J.D. Vance, that often means more protectionist and a bit more isolationist when it comes to relationships with allies, but very much wants to focus on adversaries like China.
He showed
All right, Kayleigh, thank you. Kayleigh Lyons there, our Balance of Power co-anchor, joining us live on the ground there at the Republican National Convention in Milwaukee. Of course, you can turn to your Bloomberg for more on the RNC and J.D. Vance's upcoming speech. You go to TLive Go to get commentary analysis from our expert editors. We also take you that speech live once it does happen, when J.D. Vance gets on the stage there. We got plenty more ahead. This is Bloomberg.
I believe the current data are consistent with achieving a soft landing. And I'll be looking for data over the next couple of months to buttress that view. So while I don't believe we have reached our final destination, I do believe we are getting closer to the time when a cut in the policy rate is warranted.
That was the Federal Reserve Governor Christopher Waller there discussing the policy outlook for the central bank. And we also heard from Goldman Sachs' Vice Chair Rob Kaplan. He says that Fed rate cuts are now within sight in light of progress in the inflation fight. The former Dallas Fed president spoke to us exclusively about how the U.S. election race may impact monetary policy and the economy.
I think whatever happens, the Fed is planning and gearing up to cut rates in September. It won't move in July, but they'll move in September. I'll try to stay away from the politics of the two candidates, other than to say there's still 3 or 4 months left between now and the election. And the only caution I would give is that's an eternity. And at the moment, it may seem one way. I think this is going to have fits and starts. And the big topics, though, of debate, U.S. is an aging society, and we've got to find ways to grow faster with lower costs. We're very highly leveraged, and I think a lot of the debates are going to be about globalization versus deglobalization, energy transition, fiscal spending, and I still think those debates need to happen and get resolved.
What you just said right now, fiscal spending, it seems that doesn't matter who wins at this point, you would get more of it. I mean, you have President Biden leaning towards erasing medical debt. I mean, that will all have to come out of somewhere. So what would that mean if we get a more inflationary environment for the Fed? Is that something to be concerned about just next year, but this year the Fed stays put?
So I think if I'm at the Fed, I don't want to prejudge these policies. The things I'll be watching, though, the number one is what's going to happen with immigration. One of the things that's helped the United States this year has been workforce growth due to immigration, which has allowed us to grow faster and still improve inflation. If that gets revised or changed, or you deport people, they're going to have to bore in and understand that. Tariffs is a very significant topic. But the fiscal spending, I think the jury's out as to how a new administration will handle that. We're running in the United States close to 7% of GDP deficits at full employment. 2019, we're at 4%, and you're starting to see the stresses in the U.S. being able to sell the 10 and 30-year treasuries. So I still think there's a lot of debate on those issues yet to come.
Goldman Sachs, is it making calculations right now of potential tariffs being upped, even if it was President Trump, even President Biden right now talking about those tech controls?
So we have economists that have written and doing scenarios on a whole bunch of policies. But on tariffs is a good example. All things being equal, tariffs would raise costs. However, things are almost never equal. There are adjustments made. Maybe people substitute other types of products for those where there are tariffs. Example would be lithium batteries. If there are tariffs on lithium batteries, maybe the next generation of batteries made in the United States will leapfrog lithium. So I think the jury's out. I think people out there should just be prepared that there's a lot yet to clarify. The Fed, though, its path, I think, for September is pretty clear. I think there's a good chance they could do one more cut in December. But I do think if new policies come out, it'll take some time for them to digest those, and that may affect their next decisions.
And that was Robert Kaplan, their vice chairman at Goldman Sachs, speaking with us earlier, of course, in Tokyo on the outlook for the Fed. And, based on the current pricing and depending, of course, on what Madame Lagarde says later today, ECB and the Fed could be cutting in the same month. Yeah, as we were waiting for, of course, signs of easing ahead. Right, we'll take you straight back now to Milwaukee, and I think in a couple of minutes, we are expecting to hear from Donald Trump's running mate, J.D. Vance, to talk at the Republican National Convention there that's taking place. We understand after the current speaker, of course, it would be his wife, and then...
She's going to introduce him on stage.
Yeah.
But yes, as Kaylee Lyons had mentioned on the ground there, the focus of night 3 of the Republican National Convention this time is on foreign policy. So we're particularly going to be listening in on maybe any sort of, the tone and the message from J.D. Vance when it comes to not just Ukraine, but in particular in this show that's of our attention, China as well. That speech could be coming up. Plenty more ahead. This is Bloomberg. .29 a.m. in Tokyo. Japanese markets are heading to that lunch break. They're going to need it to take a little bit of a breather here after the sell-off that we're seeing that is getting a little bit more pronounced now. Take a look at Nikkei 225. We're down some 2%. The Topix is lower by 1%. And, of course, we're still focusing on that strength in the yen. We're back to 156 levels, given we did see it strengthen some close to 1.5% yesterday. So we are at least holding on to these gains, still trying to figure out what's really behind it. Perhaps it was some of those Trump comments when it came to the currency that did kind of trigger that move. But certainly we're watching, and JGB yields are also just 1 basis points higher here this morning as well. But really, what's driving all this and why the Nikkei might be down, you got to lead it to one stock, and it's Tokyo Electron today. It is.
It is the biggest percentage decliner on a points basis. It's also one of the biggest drags there. And then next to that, you have some other peers like Disco, for example, which is also a semiconductor play. So Tokyo Electron currently at 10% going into the lunch break, currently on track for the worst day since July of 2015. So worst day in 9 years. I think we do have, of course, and some of our analysts have started gaming out scenarios if, in fact, we do get more curbs coming through there, what the potential hit to revenue would be. Yeah, what our sources have been telling us is they're weighing the sort of FDPR, right, foreign direct product rule, that is what people are, and some of the allies are saying, are more draconian measures here, and perhaps one of the most severe trade restrictions available for companies like Tokyo Electron, like ASML, that do continue to give China access to this sort of advanced semiconductor technology. So that's why you're seeing Tokyo Electron really feeling it. Masahiro Wakasugi, our BI analyst, is saying that, look, maybe 10% of Tokyo Electron sales could be impacted, they calculate, if, in fact, these restrictions are implemented. Market selling first, asking questions later, and then we'll figure out where we are, right? After this 10% drop. This is obviously having an impact on the regional benchmark right now. So we're down about 1%. And as you can see, the IT index, which is really partly semiconductor, it's down about 3%. Some bright spots, though. You have energy, of course. You have what's been happening in gold, for example. Property is also catching a bid. But yeah, the state of markets right now is one of risk aversion. Okay, so we're wrapping up the third plenum in Beijing. Chinese President Xi Jinping will be mapping out, of course, his longer-term vision for the economy in a very closely scrutinized communique at the close, of course, of that third plenum. Let's begin. Stephen Ingles, our Chief North Asia correspondent. He's here with us, of course, on set to talk us through how specific can this statement actually be? Or get?
More than what we've gotten so far, that's for sure. Let's hope. So far, there's not been a lot of news flow, obviously, and we expected that. It's a 4-day closed-door affair in Western Beijing. 400 or thereabouts of top government officials, with Xi Jinping, of course, at the top. You have provincial leaders, you have ministers, you have top academics, you have the PLA, you have the Central Committee, the nearly 400 members there of full-time, members, as well as alternates. So, the work report, it was behind closed doors from Xi Jinping. It's very much likely to have, been along the lines of new productive quality forces, as high quality growth, Chinese-style modernization, and the communique is going to say the similar kinds of things. In past years, we've seen broad brushstroke kind of vague comments, and it will take the Politburo meeting later this month, 24 members, not the 400 in the big hotel in the Western Beijing. It's going to be the 24-member all-powerful Politburo. They will take the marching orders from the Third Plenum and then put it to action, the long-term economic priorities. That's what the market and that's what we are going to be waiting for from the communique. Read between the lines, read the tea leaves, use whatever cliche you want, but essentially get his priorities. And I will bet it will be about technology, self-reliance, whether it's AI, chips, EVs, batteries, solar, very much likely. Those are his pet projects that are going to get the backing of the central government. Are they going to get more funds? Are they going to get policy? We have to see the specifics. But there will likely be domestic issues like tax reform to give more financing and ways to get finance at the provincial levels, which have been battered by COVID-0. And let's face it, just lack of revenue at the provincial level with high costs, obviously, with property and land sales in the doldrums. Hukou reform could also be something that could come out of the...
Yeah, it's usually, as you mentioned, domestic policies. How much is the external picture going to change? I mean, you know, the fact that there's a growing possibility of possibly a Trump 2.0, is that going to be making it some sort of stance or something in this communique?
I'm sure it's going to be part of the calculus, for sure. Whether it's going to be mentioned in the communique, I doubt it heavily. It's going to be, you know, the participants have to be fully on board with Xi Jinping as the reformer and the reform agenda. And when I say reform, it is not what Westerners think of reform, market liberalization and the like. Reform to Xi Jinping, the way I read it, is more party discipline, more party control over the economy. And that's what he wants to get everybody on board. Now, the big wild card, aside from the economy and the doldrums right now, is the external situation. And with Trump coming back potentially to the White House, you're talking about, at least the campaign pledges, of 60% across-the-board tariffs on all Chinese products. You saw the story earlier this week from UBS, a new research report saying this, if implemented to the letter of the law, if you will, this could cut GDP in China in the year following the implementation of this across-the-board 60% tariffs, cutting GDP growth in China by half. So, yes, they better be talking about this behind the closed doors at the Third Plenum.
Yeah, you know, containing the fallout. I mean, it brings us back to the first Trump term, right, when we talked about things like dual circulation, you know, self-reliance and all those other things. If I could just ask you to elaborate further on fiscal relations with provinces, right, because we have a chart. We're going to get that up, Steve, just to show you that. So we're looking at debt to GDP. So it's a massive number, but you take central government debt to GDP, it remains a small part. I think it's about 50% to GDP. That's the green line, which you barely see.
Yeah.
And this brings up this relationship between the central government and the local government, that the central government will need to leverage up more, will need to take more of the fiscal responsibility to boost this economy. What should we expect here?
Well, I think maybe more clarity on these special long-term bonds that the central government is and will be issuing as a way of helping the provinces fund you know, just daily operations, obviously. Land sales have dried up, obviously, because of the, you know, the implosion in the property market. So they don't have that revenue source.
The land sales?
Land sales.
Yeah, for local governments.
Local government land sales. So, you know, their revenue streams have dried up. So you turn to the central government, but the central government doesn't necessarily want to take on that fiscal, you know, lead weight, if you will. So, again, we'll have to get more clarification from Xi Jinping, the central government, to see how those, you know, central government long-term bonds could potentially be used to help the provincial level.
All right, Steve, thank you. Stephen Ingles there, our chief Northeastern correspondent, joining us with a preview of what could come out from this readout out of the Third Plenum here today. We got plenty more ahead. This is Bloomberg.
Welcome back. You're watching the China Show. So we understand, as we look ahead, of course, to we'll take a trip back to Milwaukee, where the Republican National Convention is taking place, and we understand, of course, that Donald Trump's running mate, J.D. Vance, is set to make an appearance very soon, in a couple of minutes, if not shorter than that, if not sooner. And we're expecting him to talk a lot about what his perhaps his policy tilt is going to be, what his foreign policy might until, and of course, just this, I guess, the coronation, if you will, as the VP pick.
And the first time he's really gone on a stage like this, right, where the whole world was going to be watching for what he says when his first speech as the vice presidential pick. And certainly there's going to be a lot of talk about the foreign policy element of it, which is the theme of this night's RNC. So, stance on Ukraine, stance on China, as we talked about. He's largely been seen as the pick because of his appeal to the working class Americans. But what about for business? What about Wall Street? Certainly he's going to try to assuage, I guess, some of those concerns about how good he is for business as well. So certainly that's going to be a key thing to watch here today as well. We're also focusing on and hearing from the Virginia governor, Glenn Youngkin. Now, he says that he sees merits in imposing hefty tariffs on China. He told us that Donald Trump's plans to slap duties of 60% or higher on Chinese goods will ensure a fair trade environment for the U.S.
Free trade really doesn't exist because we've given unfettered access to the U.S. market, and so many other countries actually don't provide reciprocal access to their markets. And let's be clear, U.S. companies do not have access on an unfettered basis to the Chinese market, and yet they expect to have unfettered access to the U.S. market. And so we've got to stand up strong for the United States. On top of that, China is not just a rival. They're trying to dominate the world, and they're trying to do it at the expense of the United States. They use economic imperialism to do it. They saber rattle, and on top of that, they use every ounce to infiltrate every bit of the U.S. Economy to understand how they can influence it. What that has translated to is a real recognition that we need to not only protect ourselves against China, but we need to fight back. And so the tariffs that President Trump imposed on China when he struck the first Chinese deal were critical in order to rebalance an unbalanced situation with China. And companies that are doing business in China, take Ford, for example. I mean, here's Ford, who has a big market share in China, and then they want to build an electric vehicle battery plant in the United States. And I can guarantee you that the Chinese government put immense pressure on them to use cattle technology in the United States. And now we're seeing that cattle technology is being banned by the U.S. military because they're worried about the influence from the Chinese Communist Party. I mean, this is the way China does business, and we've got to make sure that we're fighting back.
Most economists, though, say tariffs are inflationary. So do you think that's the right solution to this problem you don't think is currently free trade on the marketplace? Yeah,
I do have to begin with, I have lots of economist friends and worked with them for a long time. And
the
economists
says
are right and wrong.
$1,700 per every household. They ran all the numbers.
Well, I know. People ran lots of numbers at the beginning of the year and said there was going to be 5 rate cuts this year in the United States. Come on, let's be real. At the end of the day, I believe that President Trump will use tariffs in order to make sure that trade is reciprocal and fair. Fair for the United States, fair for U.S. businesses, and fair for the U.S. worker. And that's really important.